Hello investors, welcome to Simpli Stocks. In the fourth video of our 7 stocks for market correction series, today we will be discussing Kalyan Jewellers. Some days ago, the company released its Q4 business update and in that it reported very strong sales growth. But on the other hand, you can see that the stock is currently at almost 45% discount from its 52-week high, or sorry, all-time high, not 52, all-time high. And it is trading at a PE ratio of 40, which is a good valuation for a fast-growing mid-cap business. So in today's video, we will talk about their recent business update and we will also discuss the long-term growth triggers for Kalyan. But before we move ahead, as a SEBI registered research analyst, I need to give you a disclaimer that I am myself invested in this business and it is also part of our research desk tracking list. So please keep that in mind. With that, let's get started. So some days ago, Kalyan announced in its business update that in Q4, or basically in the months of January, February and March, its sales grew by 64% compared to the last year. A good part of this has also come from same store sales growth. SSG stood at 45%, meaning Kalyan has also benefited from the increase in gold prices. Now listen to me very carefully. You would know jewelry companies earn via making charges, which are charged as a percentage of sales. So for jewelers, a big advantage is that when gold prices go up, their making charges also increase automatically. On the other hand, when gold prices correct, people tend to buy gold in bulk, which fetches jewelers healthy volumes. For example, you will know that since the end of January, gold has corrected by around 15% or so. And this is what makes Kalyan special. It is sort of an annuity type business. An annuity type model basically means that it can consistently grow at 20 to 30% rate every year for a long period of time. I'll explain this to you. So as you would know that on an average, let's take an average, gold prices themselves have increased by around 8 to 10% every year. Now, if the company is also bringing another 10 to 20% volume growth, meaning growth from opening new stores or selling more gold, say if they sold 100 kg gold last year and 105 kg of gold jewelry this year, that is your volume growth, that 5%. Then combining both value and volume growth, it gives you a 20 to 30% type growth model. And this is exactly what Titan has been doing and what it has achieved. If you go and look, Titan's 5-year sales CAGR on such a large base, it is 23%, and 10-year CAGR is 18% sales growth. Therefore, Titan is a very strong role model and compared to Titan, Kalyan still has a much smaller base. So the opportunity in Kalyan is even nicer. But see, Kalyan Jewellers is just one business that is available at such an attractive price right now after the correction. There are many other businesses in the market that are not affected by the war, but due to the broader market fall, they are now trading at good valuations. And apart from this, there are also many contra bets. Basically, those stocks that have corrected because of war, but they have such strong business models that they can easily get through this 2 to 4 month uncertainty phase. So seeing all this, I have created a short 1 to 2 hour recorded masterclass on 30 such quality businesses that are currently trading at attractive valuations due to the correction. So if you want to register for this masterclass, you can message on this number or you can also register through the link provided in the description below. Alright, coming back to our discussion, as I told you that Kalyan is growing faster and has a strong differentiated business model. But then a very valid question comes up, if the company is so good, why did the stock fall so much? You might remember that there were a lot of rumors in the market around Kalyan and Motilal Oswal. A targeted social media campaign was run in which fake news was spread claiming that Kalyan Jewellers had bribed fund managers of Motilal Oswal to buy their stock. But all of this was completely nonsense. Nothing like that actually happened, but the stock corrected, and since then there has been a lot of negative sentiment around the stock. Apart from this, people were also worried that the sharp rise in gold prices would reduce the demand for jewelry, but that has not happened at all. Over the last 1.5 years, the results of almost all jewelry companies have remained strong. In fact, you can look at it the other way. The rise in gold prices has actually strengthened people's belief in gold. Its acceptance has increased. Now people think gold is a great investment that has given strong returns, and instead of buying less, they feel that they should have bought more or they should buy even more now. Plus, honestly, I don't really understand what this kind of negative sentiment is that does not affect the market leader. I'm referring to Titan here. If you go and look throughout this entire period, Titan's stock has not seen any major correction. In fact, it is currently near its all-time high as we talk. So I don't agree with the view that gold prices will negatively impact Kalyan's business. And in investing, you see, such opportunities get created when unnecessary negative sentiment gets build up. And that is when you get a good chance to buy strong and quality businesses at attractive prices. Now a humble request, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simply Stocks, where we bring multiple such videos every week. Honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video and yes, also subscribe to our channel. Alright, coming back to our discussion, I was saying that such opportunities get created randomly and you get a chance to buy quality businesses at good valuations. And see, not just Kalyan and even Titan's investors have seen such sharp corrections in the past. We all know that Titan has been the main bet of Jhunjhunwala's portfolio and he started buying it around 2002-2003. During that time itself, Titan had fallen by more than 80% and it took it another 4 years to recover. Then again around 2010 when gold and silver corrected and also after the financial crisis, Titan saw another correction of around 60%. And then during COVID too, it again fell by around 45 to 50%. So these tough times actually make tough, or I'll say great investors. So instead of looking at the fall, what you need to understand here is the long-term outlook of the jewelry sector. Jewelry and gold are deeply embedded in our culture and tradition. In India, people see gold as a status symbol, a savings tool, and also as an investment. That is why the demand for jewelry will continue for years. And right now, such good business from such a structurally strong sector is available to you at such a good valuation. The company now has a total of 507 jewelry stores. And if I exclude Parrot Lane, which doesn't contribute much to the earnings, the company has around 383 stores of Kalyan. They plan to open 80 stores every year from this point, which itself gives you about 20% growth in store count or what we call volume growth. On top of that, if you add another 10 to 15% same store sales growth, it easily becomes a 30 to 35% growth business. Now, you might have concerns about the Middle East business because of the war, but see, only around 11% of sales come from international markets. Also, the margins in Middle East are about half of the overall business. So the impact on profits will not be very significant. And we are seeing the war situation is also de-escalating. So that should not be big concern. And I wanted to keep this video short also. So let us quickly do a valuation exercise for Kalyan. Then we will quickly wrap this up. Now in Q3, the company had EBIT margin of 6.4% and a net profit margin of 4.4%. If we assume similar margins and around 35% sales growth for FY27, then this year's sales can be around 48,000 crore rupees. Based on this, EBIT would be around 3,100 crore and net profit can be around 2,160 crore. So even though the stock is currently trading at a PE of 40, on this year's estimated profits, the forward PE comes to around 20 to 22, which is a very attractive valuation for a fast-growing mid-cap business, especially when it belongs to a structurally strong non-cyclical sector that will keep growing for years to come. So I think you can look into this business. It is a good business, the valuation is good and long-term tailwinds are there. Lastly, if you found this video helpful, make sure to hit the like button and yes, also subscribe to our channel Simply Stocks. Your support through likes and subscribes motivates me to bring more such in-depth research and quality analysis for you every week. So I'll see you in the next video. Happy investing.